Hello, guys. Welcome to the show this afternoon. Let's talk about Deutsche Bank for a minute. If you guys haven't been following the story, you will know that Deutsche Bank is systemically one of the banks that has the highest risk for going under, sinking. Now, let's get the charts open right here, and let's take a look here for a second at Deutsche Bank stock. Let's focus in here and take a look at Deutsche Bank stock. Now, here's what it's doing. It should be gone, but it's been hanging in there. And they've actually been finding buyers. If we go back, let's take a look at 1 month here. We can see that they've been finding buyers. Have been pushing it up into the nines, and it was down. Let's go back to 6 months. You can see these two drops right here. It dropped down here, right here, to 8.15 euros per share back on Tuesday, November 20th. And then it dropped again down to 8.17 euros on Friday, November 23rd. And we've seen this little bounce right here where it went back up to 8.66. Let's take a look at the 5-day. Here, it should be right in here, 8.69, wrong in there. It went up to. See this little bounce up here, and it went up. They were finding buyers for their stock, and I think the logic of these buyers is that Deutsche Bank stock is going to be a good deal in the future because Deutsche Bank is going to get rescued. This is what they think. But I got a little bit different opinion on that. I think it's very possible that Deutsche Bank is going to be taught a lesson by the powers that be. And the reason why is because Deutsche Bank squealed on them. They've been doing this manipulation of the price of gold and silver for a long time, and so have their cronies. Basically, the way it works is the higher guys, the guys that are in the seats of power, they give the order to do, they give the nod, let's just call it the nod, to do this manipulation, price manipulation, and then they get their man that's working for them that's low in the chain of command, and he takes the fall if anything goes wrong. Well, that's what's happened. Deutsche Bank squealed on them. And now some of these guys are actually having to take the fall for silver manipulation because Deutsche Bank squealed. They named names. They named the banks that are involved in this manipulation. They named some of the other banks and stuff, and they squealed. They squealed. And so now they're out to get Deutsche Bank. They're using all the tools available necessary, and I think that they might teach Deutsche Bank a lesson. They might let Deutsche Bank actually go down in a blaze of glory. You got to understand something. When you move up to the highest seats of power, the highest echelons of power that are controlling this financial system, those guys are not interested in money. Well, yeah, they do like money, but no, money's not their big object that they're interested in. They're interested in power over the world. They're megalomaniacs. They're globalists and megalomaniacs, and they've got so much money. They got money coming out of their ears, you know. So now let's take a look what's going on here. You got to understand that these megalomaniacs are in control, and right now I think they're in the driver's seat to teach Deutsche Bank a lesson. It says Deutsche Bank headquarters raided in Panama Papers probe. Well, you can just bet that this raid that's going on has all been planned and orchestrated. And it might be just the beginning of the end for Deutsche Bank right here. It says London, CNN Business. Deutsche Bank head office and other locations in Frankfurt were raided by 170 police officers and tax investigators on Thursday as part of a money laundering probe. Prosecutors said that the raids target 2 Deutsche Bank employees and others who have not yet been identified. The German bank is suspected of helping clients to set up offshore companies in tax havens. Well, this is the same thing as all the other banks are doing. But the other banks aren't getting raided for it. The reason why is they don't have a vendetta against these other banks for squealing. You know, I mean, criminals, they pat each other on the back, and they let the criminals that are falling in line. It's almost like an army, you know. And the way it works is they all have an order chain of command, and when somebody breaks that chain of command, then they punish them. In the army, if somebody breaks the chain of command, if they're a deserter or something, what do they get? you know. And so Deutsche Bank, you know, and now it's coming to pay. They got to pay the price of their schemes. Deutsche Bank, but these other banks are involved in schemes too. They just haven't been caught. Deutsche Bank's getting caught, and they're getting slapped hard. It says the German bank is suspected of helping clients to set up offshore companies in tax havens. Prosecutors said in a statement, investigators are also looking at whether Deutsche Bank failed to report suspicious transactions. The lender and prosecutors said that the probe is related to the Panama Papers, a 2016 investigation into money laundering networks and shell companies set up by Panama-based law firm Mossack Fonseca. Frankfurt prosecutors said that a subsidiary of Deutsche Bank, the British Virgin Islands, has served more than 900 customers doing $311 million worth of transactions in 2016 alone. Deutsche Bank said it was cooperating with authorities. Fat chance that's going to help them. I think things are just turning bad for Deutsche Bank, and it's going to just move from bad to worse. What I'm looking for is the Deutsche Bank stock price to drop below $7. That's what I'm watching. Because I think once it drops below $7, then we're going to see a massive slide in the stock price, because all these guys out there who have been toying with the idea of buying Deutsche Bank stock, thinking that the bank's going to be rescued, thinking that the stock's going to go back up to $100 or whatever, and they're buying in for $8 or whatever, $9, and they're thinking they're going to make a ton of money. Of course, when I'm saying bucks, I'm talking euros, okay? They're thinking they're going to make a ton of money when Deutsche Bank gets rescued. When they see that there's no rescue coming and Deutsche Bank is sliding on the slippery slope to hell, then they'll start pulling out en masse. And they'll start to dump. They'll start to dump this. And when they dump Deutsche Bank, that's going to be our Lehman moment if that comes. The probability, let's put it this way. The probability now in the last few months of what I've been seeing Deutsche Bank stock doing has put us in the spot where I'm saying to myself, hey, you know what? I think we're going to have a Lehman moment. Now, the probability of that Lehman moment coming, in my mind, has went up a lot in the last few months. The probability of Deutsche Bank actually being able to cure their problems and actually become a viable bank again, I had those hopes there 6 months or maybe a year ago when Deutsche Bank was first in trouble, that maybe they would be able to pull it out of the fire somehow. But now I'm losing hope, and I'm starting to think, hey, you know what? This looks like Deutsche Bank's going to go down, and just how far this network of derivatives products that Deutsche Bank holds will extend into the banking system in general. First off, you have to understand something. Even though it's like 45 or 55 trillion dollars worth of nominal derivatives contracts that Deutsche Bank has in their derivatives book, those derivatives, an awful lot of them, what they do is they cancel each other out. Okay, that's the value of the derivatives, but that doesn't mean when the derivatives cancel each other out that that's what the net that's what you'll end up with. What you'll end up with is a different figure altogether, probably 50 to 100 billion. But that's going to leave a gaping hole in the financial system. That probably 50 to 100 billion dollars will leave a gaping hole in the financial system. But it's probably not a bigger hole than happened back in 2008. Probably something in similar order, maybe a little bit bigger. But it's nothing that they can't cover over with money, because they can cover the situation over with money at a certain point. But they can make the system whole again. But it could put a shock into the system. If Deutsche Bank goes down suddenly, it could put a shock into the system that's strong enough to create a crisis and extend into other parts of the markets and stuff, and actually bring the system down into a crisis that very much appears like the 2008 crisis. And, of course, the Fed would have to respond. And the other world central banks would have to respond, because we're already starting to slip into an economic malaise. It's already starting to happen. The China is one of my bigger than Deutsche Bank, right now, China's my biggest concern in the financial system, because they've had an enormous, just very recently, an enormous amount of a drop-off in the factory production and stuff like that. I mean, it's just unreal. But the numbers aren't in yet. And we all know that the Chinese actually fudged their numbers. They changed their numbers to make the economy look an awful lot better than what it really is. We all know they do that. But even though they do that, still, the numbers are still going to look terrible when they come in from China. And those numbers haven't come in yet. And when they start coming in and people start realizing just how much the Chinese economy is sliding, that's going to have, I think, a bigger effect than Deutsche Bank would if Deutsche Bank fell suddenly. A bigger shock effect. So it might be a 1-2 punch. You get Deutsche Bank collapsing, and at the same time the Chinese numbers start to come in, and we go straight into a recession. That's the answer to all this. We go straight into a recession, and it's not going to be, I call it a recession, mainly because everybody else is calling it a recession, but I think it's going to be more like actually a depression. It's going to be more serious. And then we're going to have to wait for the reaction of the central banks. Once that reaction occurs from the central banks, well, let's just put it this way. You better at that point have already have your physical in your own possession at that point, because you might not even be able to buy any. It might be such a hot commodity, you know. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.